Hi, welcome to the Crypto Experts. So back in January, folks rooting for HBAR were pretty stoked. After a worrying stint of under 4 cents, the project had a pretty big upswing. Even broke into the top 30 in terms of market cap. Now it slipped to 35th place, but don't stress too much about the drop. HBAR still got a lot of value packed in it. Whether HBAR climbs back up the ranks is anyone's guess, but its features make it look like it will soon. So the crew at HBAR is putting in the grind to improve their tokenomics. That's pretty cool, especially in times like these. Because when the real bull market hits, and many think that's going down after Bitcoin's halving event in 2024, or maybe even later this year when Bitcoin's hovering around 35 to 40k, HBAR could start to take off. Yeah, it get its fair share of flack, but it could still surprise many people. And you know how it is, right? When something new rolls out, investors are usually a bit wary, but they start to perk up once they see it doing its thing. Lots of people might be jumping to grab HBAR at its current price of 5 cents, but watch them pile when it cracks $1. In the next real bull run, HBAR has a decent shot at hitting the dollar milestone, maybe even cruising past it. You've got some who are even more bullish, thinking HBAR could hit 2, maybe $3. They're betting on HBAR because it's got a leg up on many other blockchain systems. The fixed fee structure they've got going on, along with tech that's scalable but still secure, that's a recipe for some serious potential. So here's the deal with how they use hash graph technology. They've got this gossip protocol where nodes share info about a transaction. But with hash graph, the nodes only nod to a transaction once it's been dealt with because the system mixes up the order. On the other hand, blockchain, that's a step-by-step process. Alright, so in blockchain, the whole system gotta hit pause until a transaction is either a go or a no-go. Hashgraph, though, shakes things up. It randomizes the order of transactions, making it super scalable. That's why Hashgraph likes to say it's built for what's coming and why many people think it's ahead of the curve. So HBAR kinda likens blockchain to a tree that needs some regular trimming to keep the branches from going wild and ensure the ledgers just got one chain of blocks. Hashgraph, however, is not so much about new growth as it is about weaving that growth back into the ledger. In blockchain and Hashgraph ledgers, any user can whip up a transaction that'll eventually get slotted into a container or block. After that, it gets spread out across the distributed network in Hashgraph. In Hashgraph, every transaction container gets folded into the ledger with nothing held back, makes it more efficient than blockchains. All the branches stick around forever, but they're all linked and woven into a single thing. But if a blockchain gets new containers coming in fast, it might buckle under the pressure because the new branches are growing too quickly and can't be trimmed back. That's kinda what went down with Solana when the network crashed, because of a whole swarm of bots dealing in small transactions. That's why you've got things like proof of work or other setups that put the brakes on growth in blockchain. With Hashgraph though, there's no problem if the data structure shoots up fast. Any member can whip up transactions and containers anytime. Being the first one out the gate with this kind of tech, HBAR's got that first mover advantage. No other crypto Hashgraph technology, so HBAR's sitting on something solid and fresh. The top dogs at Hashgraph aren't really sweating the small-time investors. They're aiming for the big leagues, enterprises. They've got this fixed fee structure, right? It's like 1/10 of a penny, which is a sweet deal for companies moving big volumes and wanting to keep costs low. And this strategy's paying off. Dell's just signed up to their governing council, which is already packed with 28 huge companies, each sitting on trillions in market cap. As this council keeps growing, it's cool to know that everyone's got an equal say in decisions about the network. HBAR's all set for scaling up, thanks to its fixed fee structure, solid partnership, and ISO 222 compliance. Mix that with some big names involved and some one-of-a-kind features, and it's got a bit of a shine in the market. Sure, you'll have some naysayers claiming other projects are packing better tech, but a good chunk of investors will see the potential and win down the line. We're in this space where folks are sizing up different technologies with all the chatter and speculation. But HBAR is a testament to just how varied tech can get in the crypto world, with all these different blockchain systems and companies that help to scale up those blockchains and ledgers. The real world demonstrates how different technologies such as Microsoft products and Google products can coexist and thrive together. Although one may be more popular than the other, each one has its pros and cons that make them excel in different ways. As mentioned earlier, Hedera's got its eyes on the prize, and that prize is enterprises and businesses. They're all about helping those guys make quick, cheap transactions while being good for the planet since they're carbon negative. And that's where Hedera carves out its niche. It doesn't need to be the main ledger to make it big. Some might think it must be number one, but not really. Hedera is a significant advantage in attracting enterprise clients. And as more companies adopt their technology, they are gaining further interest in joining their governing council. So HBAR sitting at 5 cents right now, with its all-time high at 56 cents. Just a matter of time before they break that record. Currently, 31 billion HBAR tokens are floating around, which is about 62% of their total 50 billion. Not too long back, they had less than 40 billion tokens in circulation. So their inflation's taken a pretty big dip, so all those folks crying bad tokenomics. Their beef is outdated now, with inflation being a non-factor. This mid-cap crypto has a market cap of 2 billion, but that could shoot up to 3.5 billion with full dilution. Even though it's a mid-cap, it's still pretty early days to get in on this tech that could yield some solid returns. The whole setup behind Hashgraph makes it super scalable even when dealing with many transactions. That's pretty key if you want to be the top dog enterprise ledger. You've got to be able to handle high volumes without running into big problems like security holes or downtime. Hashgraph has been built with this kind of scalability in its sights, and that's part of what makes it a good look for enterprises on the hunt for a ledger that can get the job done. The deeper you dig into Hedera Hashgraph, the more you start to see how awesome the tech behind it really is. Yes, there's a lot of doubters out there, but the more you dig in, the clearer it gets that this is the future. The whole ecosystem of Hedera and what it can do is simply impressive. They're adding new stuff to their lineup daily, and many things are happening within the Hedera network. Sadly, not many people are talking about it, either because they don't get the tech or they believe centralized or blockchain systems have the upper hand. Blockchain and Hashgraph can coexist, and there's a bustling market for retail and enterprise adoption. When it comes to enterprises jumping on board, Hedera's got a bit of an edge. And with that adoption, the ledger's price could take a pretty big leap. So getting in on at Hedera at its current 5-cent price could be a killer opportunity, seeing as it's got a lot of room to grow. This was the Crypto Experts on HBAR's future. Do you think it'll see some astronomical gains? Comment your thoughts. Until the next video, bye!